question is, should I start beat bopping here? As the sound is not coming through the computer. I always like to ad lib this part, Frankie, whenever I get this joyous moment.
See, I like when it's like slowed down a little bit, right? It sounds like DJ DK's on the 19s. You know, I like it when it's got that little slowdown vibe going on.
I like it as well. Welcome out to today's halftime report here, 7/2/2021, last day of the trading week, actually, in front of a long weekend. We got a holiday on Monday. Markets will not be open on Monday, but we're here live. We're going to break down this action on a day where the market is extending a winning streak here. The S&P 500 is now up for about 7 different bars in a row, kind of fading higher, hitting new all-time highs on a daily basis. And here, actually, a nice little candlestick up 0.5% following the jobs report. We'll get everybody's analysis on that. Before we get too far into the markets, though, let's bring everybody in here and have a conversation with pleasantries first. Welcome out to the show. If you're out there and you're coming into the channel, hashtag Team Tackle right in the chat. Excited to have a conversation today with Coach Frank, Coach Mark, and Coach Matt, and myself here, Coach Tim, your host for the halftime report. New people to our channel, subscribe, click the bell. We do this kind of content every day. The markets are live. We go live 12:30 p.m. Eastern. All right, boys, let's have some fun here today. Let's bring everybody in. Matt, first you. How you doing today, sir?
I am doing absolutely fantastic, Tim. I was going to start with, you were talking about just the fade grind of the market, right? Mm-hmm. And I was going to say, what are you talking about? This market's firing off like Richard Branson into space. And then I realized that candle only represents 0.5%. That's how boring the market's been in the fade last week.
When the big candle that grabs your eye is 0.5% bar, it has been an upward fade here, kind of drifting higher.
It's July, Friday before July 4th weekend.
Yeah, man, nothing wrong with these conditions right now. Bull market intact.
Beautiful. Market's good. America's good. 4th of July is coming. Who's not going to have a happy weekend?
I agree, brother. I'm excited about the whole thing myself. Frankie, how you doing today, sir?
Doing well. Excited, as always, to be hanging out on a Friday. Looking forward to a nice 3-day weekend. You know, we don't get them very often, but I think we'll enjoy it. 4th of July weekend. Hope everybody has a safe and happy one. Excited to talk some charts and talk a little trading with the team.
Yeah, always safety first for sure. But going to have an exciting weekend here. I know me and my family are going to do a little barbecue, maybe a little parade action as well. Looking forward to that. Mark, how are you doing today, sir?
I'm ready for a weekend. I won't lie, but I'm excited for Frank's charts. Listen, the coaches at Tackle Trading are so good between the scouting reports and Trade Masters on Wednesday and Frank's charts on Friday. I'm getting into my own summer lull. I'm going to let these fine gentlemen and ladies do my work for me, and I'll just trade the things that I like that they present me.
Dude, I like it when Frank presents his charts on a Friday, but I'm going to tell you who loves it, and that's the team out there. It's one of the most popular segments we have here each and every week. And Frankie, you got some good ones for us this week?
I do, yeah. I've got some interesting ones. Yeah, not as many. I was reminded that we've got like one more week before that earnings creep today, so ran into a few things like that. But yeah, found a few that are definitely interesting. A couple really interesting breakouts I'm excited to talk about.
Yeah, I'm looking forward to it. All right, let's get down to the analysis here shortly. Real quick, Matt, obviously the S&P 500 here extending its gains. NASDAQ's having a nice day as well. I think the story starts on the 5-minute chart or the intraday chart, though, because really this action was not necessarily going to happen until after the jobs report started firing the market out. 5:30 your time on the West Coast, 6:30 my time, Mountain Time pre-market. And the market kind of interpreting this one right now as a Goldilocks type of report. I read that exact word or phrasing that at least 4 or 5 times this morning. Are you seeing the same thing? Jobs report, 5.9% unemployment rate. We added 850,000 jobs. I know you've got a lot more takeaways on the data as well as Mark, and we'll go through some of it. But what about the market response here and general conditions here today, Matt? How are you reading them?
Well, I do believe the market response is a lot more clear than the actual labor market numbers. That's number one. When you look at just the headline news coming out of the labor market today, yes, you're going to look at some impressive job gains across the board, 850,000 net job gains. That beat the expectation quite easily. And so that number is just going to grab some headlines and people are going to have some takes based on that. But when you actually dive into the detail a little bit, this is a far cry from a Goldilocks report, guys. You're talking about a participation rate that did not even move the needle. The labor market numbers actually missed on average hourly earnings. It came in at 0.3%. The expectation was 0.4%. The average work week actually fell to 34.7 hours versus the expectation of 34.8%. And so, yeah, I definitely say it's a positive report, and the market response being positive gets it right. But Goldilocks it's a ways away from a Goldilocks report. I'd say net good, but again, it's a mixed report for me personally. The important thing whenever you're talking about labor market numbers, though, is does it move? It not really does it move the needle for the market, but does it move the needle for the Fed? And does that change kind of the projections of what the Fed is going to do? And based on what I'm reading in this report, and I mean, honestly, I don't see it moving the needle much on what the Fed's going to do in 2023, or what they're going to, or what they were planning on doing in terms of the tapering of quantitative easing coming at Jackson Hole in August. I'm not sure this report will have a final say in what they do in those two situations, but it is a positive report. It definitely shows that the economy is picking up some steam and that the labor market is gradually improving over time. You definitely got to take this as a positive, but I do take some note against the Goldilocks scenario that I've been reading a little bit.
Yeah. Some of the data is, interesting. Other of it is kind of in line and chalk as well. And maybe that's where the market is. Like, what do we do with this information? Obviously, the Fed's not going to act on it immediately, and we're going to have to just wait for them a little bit later. Payrolls did increase by 850,000. That was above expectations, but the unemployment rate ticked up a little bit, missing their expectations. Obviously, that's a kind of a scratch. Hourly earnings were up 0.3%, but that was in line with expectations. Any thoughts on some of those data points, Matt?
No, again, I got a little bit of a mix with the miss on average hourly earnings, slight miss on average work week. Participation was flat, and then obviously the overall jobs numbers were very, very impressive. But even in the jobs numbers, when all you're doing is looking at that net number, 850,000 new jobs, you're like, wow, that's really, really, really impressive. But when you're looking at that, look at the breakdown of what, when you and I were talking about it, what was my first response?
Well,
a boatload of those are going to be seasonal based, right? And a boatload of those are in leisure, hospitality. They are seasonal based. So again, I don't want to throw cold water on the report. I did take it as a positive. I just don't think it's to the point where it's like, oh my goodness, the Fed is absolutely going to act here. And so I've been around too long to realize what a 5.6 to a 5.9 to a 5% unemployment rate means to the Fed. It means that the labor market needs more improvement. That's what it means.
Well, and there's always sobering reminders in the data in that regard. Quite frankly, long-term unemployed actually ticked back up this month, where it was down last month in May. It went down by 400,000. This month, it went back up by 250,000. And we're still like 2.9 million jobs of the long-term unemployed above the pre-pandemic levels. So there is still a lot of work in the labor market. And you mentioned leisure and hospitality.
Yeah, go ahead.
Almost half of the job gains this month were in that sector, probably like 40%. So 350,000, 360,000, something like that.
And again, very positive. You got to like the response. You really like the market's response on the backs of a positive economic response as well. So that goes, that's 2 + 2 = 4. And you like it when the market gets it right like that. But again, I just don't think this moves the needle for the Fed at this point. The Fed's dual mandate is inflation and labor market numbers, and at no point has the Fed ever seen a 5.9% labor market number as normalization.
Yeah.
Improvement, yes, absolutely. Positive, yes. But again, I still think we got a ways to go, and I think that's what the Fed is going to see.
Well, let's talk about the technical response here, because obviously we are moving higher, and even as we're watching the intraday chart, it's extending gains here on the S&P, just kind of fading up, but very bullish overall in the overall market conditions. You got to like the breakout from last week. Market has extended the rally. Frankie, let's get you on the first kind of thought here. What's your read on the chart and the technical response?
I mean, you have to like it, right? I mean, anytime you're a new high, it can't be all bad, right? As they like to say. The confirmation of the breakout, we've now seen, both in the low that we hit, a couple of weeks ago and the follow through on the breakout, we can really see that, it's real, right? People, for better or worse, right or wrong, they believe in this. With any breakout trade like this, I always say, hey, you know what? It's very normal. It's fair if it were to pull back to the breakout point, which is at approximately 4250. You know, there's things, intraday stuff. There's the 9 EMA. There's the rising 20 that can, you know, act to support before that. But right now, I mean, it's a breakout. It's a little bit extended from the breakout point, at least on the daily chart, I would argue. But I mean, that is about as mean of a thing as I can say to those technically. You're getting separation on the shorter term moving averages. This is, you know, what you want your bullish breakouts to look like, right, Maddie? Where it breaks out and it really never gave us, some days were better than others, right? Some, you know, today definitely, you know, last couple of days really stand out. But even before that, when it was kind of trying to figure itself out, it never did anything to really shake your confidence on the breakout. It just didn't get moving as fast as you probably wanted it to, at least if you traded the breakout, right? So I think you have to like where you're at technically on the S&P. I'm looking at that 4250 as kind of the big level of support. If we see a little bit of a pullback, any pullback into that area would be very interesting, I would argue.
Yeah, and I would actually consider that a little bit of a deeper traditional bullish retracement if it ever did that. And a lot of that is based on the current momentum that you're seeing in the chart start to pick up some steam here. And when you start to see the chart, I don't think we're overextended. Your RSI is still hovering at 63. The concern is you're 6-7 bars into this breakout, right? But for the great vast majority of it, that's a doji. That's
right.
Very narrow range, nothing type candles, right? And so even though you're 5, 6, 7 days into this type of price movement and you're about 2 weeks into it from the higher low, you still have some room to run, in my opinion. You had a little bit of a high base here you broke out of, and so that's a positive to the continuation of the run here. You're also, from an RSI perspective, you guys know how much I like RSI on potential breakouts. It really does help people just give a nice visual identification. And right now you're currently at 63. You have a positive slope that indicates that the market certainly can continue to move in the bullish condition. But when I'm looking at this type of price movement, I'm really looking at this from a weekly chart perspective, guys. And you know, we've seen a lot of times in all of history, you know, the market's going to break out and it's great, it's swing trading environment. But I do see a little bit difference when you have multiple time frames. Those multiple time frames are aligning, and especially when that weekly chart starts really cooking here, you could see what I would consider what would be a true leg up in the marketplace. And that's a lot based on these weekly type legs up. Where you see it on the daily chart, it's just that constant fade, constant fade. Well, on those weekly charts, those are actually legitimate higher highs on the weekly chart. And so you look at the S&P 500 here, and yeah, a little bit overextended this week on the breakout. But you look at that weekly chart breakout, you got to love the consolidation over the last couple months. You got to love that breakout there. And so you got to like that when you're looking at the other indexes. Dow Jones just hovering right underneath that 35K breakout. But again, we'll talk about the Dow Jones when we look at a little bit of the sectors. Taking a look at the growth area of the market, look at what the NASDAQ did this week. Well, last week you broke out of that longer term consolidation. You see that consistent run up. And so these markets look like they want to cook a little bit here, guys. And I like the multiple time frame analysis I'm seeing on the market. Think about, you know, Tim, you started off the analysis today looking at that intraday chart based on the price response to the labor market numbers, bullish. When you're looking at the daily charts, you're looking at the price response bullish. When you're looking at the weekly chart, you're looking at a price response that's bullish. And you're looking at these in time frames that are just currently breaking out of longer term consolidations. And so you got multiple time frames, you got a lot of tailwind behind you, and you don't have a lot in front of you until you start getting into earnings in a couple weeks that really could drive a wedge into this. Obviously, anything can happen from an unforeseen perspective, but you got to like the market over the next couple of weeks, in my opinion.
It's bullish. You know, I think you have to call it that. You have to like the conditions right now for sure. And momentum is in play, and direction is definitely in play.
Yeah, and quite frankly, you've got to like the market the entire year. It's one of the best first halves of the years, and you're starting the second half of the year on fire.
Yes.
And we got July 4th with burgers and hot dogs and beer.
Exactly.
Fun and fireworks and patriotism. I mean, my goodness, it's an amazing day today.
Yeah. And over the last 6 weeks or so, everybody's been able to participate at different places. One narrative that we were tracking was, the rotation around different sectors. I want to talk about that in just a minute here, Matt, as well. But while we're on indexes, I'm looking at the other two, the Dow and the Russell. They're obviously not participating as much as the NASDAQ and the S&P are. I love the way the Russell is developing. I guess different eyes are going to always interpret this in a different way. I see a higher pivot low and a potential breakout developing, cooking up after 4 or 5 months of consolidation. Others might just see resistance is right there and banging on the head, right? And keeping it down. Matty, how are you reading the chart here on the Russell?
I see the same thing. You're looking at, you got to like the potential pivot here. Let me kind of highlight that. You got to like the potential pivot there. And as long as this 2300 level holds, it does line up the 2350 breakout fairly decently. Don't think with all the price action and the price response you're seeing in the S&P, you're seeing in the growth areas of the market, and specifically the NASDAQ as well. I think you can hesitate on directional trades until the breakout here on the Russell 2000.
Yeah, no, it's definitely not confirmed yet, but I like the development here.
Oh, I do too, and it's got to be on your radar. There's no doubt about that.
Frank,
yeah, I mean, I would say both things can be true, right? We can be looking to be trying to put in a higher pivot to take another run at that resistance. And if it breaks, it breaks, right? On the other side, I mean, resistance is resistance for a reason, right? And so I would definitely put this chart, regardless of what it was, just happens to be the Russell, on the breakout list. But I would agree with what Maddie just said there. Talk to me when it actually breaks out. That would be a very legitimate signal in my opinion. But on the other side of it, until it happens, it's still sideways just because it's knocking out the door. This is where we should start being prepared, right? Whether it's for directional trades or for maybe managing condors. How are we going to respond if it breaks that upside? But until it actually does, well, I usually assume that it's going to be hard, right? And because it's hard to break resistance.
Mm-hmm. One thing I did want to chat with the team about here today, Matt, was the sector performance happening in the market underlying these indexes. As we go from index, we can then move to sector, then to individual industries, as well as companies. Sectors, though, are an interesting bag today. And I got to tell you, even over the last couple of weeks, I've been, really watching those cyclical areas, seeing if they can make a comeback. There's some interesting chart responses there. I want to get your take on what grabbed your eye in the sectors, because I know you went through all of them this morning in preparation for your weekend rankings in our scouting report meeting. What stood out to you, Matt, in the sectors?
Well, most of the market this week has been fairly decent. Can we all agree with that?
Yeah.
Right. I mean, there hasn't been like just a area of the market that's like, oh my goodness, just very concerning, right? You're going to see some upgrades in the defensive areas of the market. You'll see some upgrades in the cyclical areas of the market. And again, you have to have a fairly positive opinion of what you're seeing in those cyclical areas. Let's take a quick peek at them from a technical perspective. Industrials, and on the backdrops of all the, rotation we saw here, industrials reclaiming all the moving averages, hammer candle on the fire off response, breaking the right shoulder of 102.75. Now all these moving averages are going to start working as a little bit of support for it. And we know what happens when that right shoulder gets violated. When that right shoulder gets violated,
it's a bear stop out trade too, right, Maddie? Where
100% it is a bear stop out trade. So I do think you got to like what you're seeing in the industrial response following the recovery of the violation of support from 2 weeks ago. I think you can say the exact same thing about the financial space, just slightly underneath the performance of the industrial space this week. But you're looking at a very similar type of technical response following the violation of support from a couple weeks ago. Fired off coming into the market 2 weeks ago. This week, we knew the news coming into this week in the financial space was going to be driven by specifically those stock buyback programs, increasing dividends. We're starting to see the financial companies, specifically the banks, start to do that. That's obviously a positive growth technique for the financial space. Technically, I love this potential breakout here, guys, of 37. Once you reclaim these moving averages, again, we know in recent history what this has meant to these types of markets. They typically see good price response coming back up into these resistance channels. And so I do think specifically in the cyclical areas of the market, you got to like what you're seeing in industrials. You got to like what you're seeing in finance from a technical perspective. And
Stay
then
on
you got to,
financials 1 sec. Stay on
yeah, go ahead.
financials 1 sec. I want to add one theme-based story as well,
Yeah.
Matt, that you and I knew was going to happen the second we saw the Fed stress test last week. This week, we've seen story after story after story about JP Morgan, Goldman Sachs, Morgan Stanley,
Yes.
increasing dividends and stock buyback programs. So I think there's also some juice behind the theme in financials if you can also get the technicals to line
Absolutely.
up.
Absolutely. We know how strong of a theme stock buybacks can be to the financial space. It's the number one reason they are now they are now seen as growth based over the last 13 years. And so coming back, and a little bit of backdrop to that, Tim, it was the Fed who stopped that last year during the pandemic, and we didn't know exactly the extent of the financial economic problem. And so the Fed put those limitations in place that the banks and Wall Street could not do dividends and stock buyback programs. All those banks passed the test from a couple weeks ago. The order was lifted this week, and now they're all going to start doing it. And again, that's a very positive catalyst from a bullish perspective, typically in the market. And now technically you're looking at a scenario where you've had 5 days of consolidation. You're looking at a fairly clean technical environment on this resistance channel. Look at the hourly chart there and tell me you don't like that, the cleanliness of that 37 handle. You got to like the cleanliness of that 37 handle. And so, yeah, you do like the technical response this week. And the consolidation has been very consistent in the financial and the industrial space. The other two areas of the cyclical areas of the market would be the energy space as well as the basic materials. Basic materials just having a very difficult time finding its you call it a theme, call it momentum, call it whatever you want, but it's having a very difficult time following any of the price response we've seen in finance, any of the price response we've seen in industrials. And so I do think you got to be a little concerned about the basic material area of the market not picking up steam when the financial area did, when the industrial area did. And if you just think about this visually here, this the 50-day moving average on basic materials. You come back to finance, you had the same degree of drop in price in finance. The recovery has been stronger. You got to like that. You had the same degree of drop in industrial. The recovery has been stronger. You're breaking out of those moving averages. And so I do think you got to be a little bit concerned that materials has not been able to pick up steam when seemingly everything in the market outside of, say, utilities has picked up steam. Even staples, consumer staples, has picked up a little bit of steam and shown a little bit of bullish momentum. Materials hasn't had the ability to do that. And then the last area of the cyclical area.
And Matt, I want to just add something to this thing because I think it's a very critical, important point. The value trade is dead, in my opinion, but that doesn't mean value sectors are dead. You said something a couple of weeks ago that I thought was spot on, and it plays into this analysis that you're going to see separation because for 6 months, industrials, finance, they all traded the same, right? Mm-hmm. They all traded the same. And you really can in those values areas, those areas that move together. I think you're going to see, and I think you do too, from what I've been listening over the last couple of weeks. Some of them they're going to separate and they're going to trade on their own based on different themes, different areas, and whatnot.
I don't know if I'm prepared to say the value trade is dead. I saw a report from this week that said about 2/3 of traders are still betting on value in the back half over growth. And the anatomy of the bull market, we've seen that play out this year as areas of the market take a break before they cook again. Mm-hmm. And then those areas of the market take a break before they cook again. And so I don't want to say the value trade is dead. It was very, very good. We've seen some rotation, and I think tackle trading specifically has been all over the sector rotations. Quite frankly, over the last year, I think tackle trading has been very good with sector rotation models. And so I don't think the value side of that equation is done. I just think we're seeing some legitimate rotation coming back into the growth. But what we haven't seen is utter weakness in any area of the market. You've seen hesitation, right? And that's concerning. Like you take basic materials for a second. The concern is it didn't go up. It's not like it went down. Right? It just didn't go up. And so you got to like it in finance and industrials a little bit more. But again, I hesitate saying it's dead when what I'm seeing is just rotation in a bullish in a bull market. When you look at the when you look at the growth areas of the market where that rotation has really been strong over the course of the last month or so, that would be the comms area, the discretionary space, as well as the technology space. And tech's just very strong. We know what's happening in the tech space. We've been all over it ever since bear stop out day, ever since the break of the right shoulder. We've been all over that. It's been upgraded, and the tech space is going to get another upgrade, despite the fact that it is overextended from a technical. You got to be looking at this as a momentum type area of the market at this point. When you're looking at comms, love the breakout today on comms. 4 days of hesitation, 9 EMA catches up to it. Clean breakout with a no sell day. That's going to be looking for an upgrade as well. When you're looking at the discretionary space, which is the one area of the growth area that had not participated to the same extent as tech, the same extent as comms, you're now looking at a potential breakout after consolidation. Last week we're looking at this being overextended. You're still overextended on the shorter term charts, but I like the consolidation here. I like the hesitation here, and I like the breakout here on multiple time frames in the discretionary space. I think you're looking at a fairly decent upgrade in the discretionary space. And so even though this week you're seeing, again, industrials and finance do fairly decent things, and I like those two areas of the market, you're going to be looking at potential upgrades in both industrials and finance. I'm looking at a downgrade in energy, quite frankly, and more so because of the double top action this week and the overall confirmation of the slowing momentum of trend and pattern. I'm looking at a downgrade in energy. I'm looking at stabilization in materials. Both of that would put energy and energy and materials into the 40 area, whereas you're looking at 30 rankings on industrial and finance, where the movement is still happening, though. And I think this is the important point. Once again, you like some aspect of what's happening in the cyclical areas, but you like everything that's happening in the growth areas. And I think that is very telling for the mentality of the marketplace right now. Materials doing nothing, energy doing nothing, finance and industrials heating up. But what is really cooking is those growth areas of the marketplace. And on a day where the unemployment rate came out, and we know how important the Fed is, guys. We know the importance of Fed monetary policy to the marketplace. On a day where the labor market numbers could have sparked a good news is bad news moment. And for those of you that do not understand that, positive labor market numbers typically means the Fed's going to curtail tapering. Well, that would be one of those good news is bad news type moments. That is not what we saw here today. You saw the continuation of the money coming into growth. I think that's very telling for what this market sees of the growth areas over the next few weeks. And I like those areas of the market. So even though you like some of the positive response in defensive as well as cyclical, you still got to love the cooking action that you're seeing in the growth areas of the market.
Yeah, and growth does not necessarily detract from that response that's coming back in cyclical. They both can participate, like we've seen the anatomy of a bull market. You and Tyler have talked about this for months. Well, a little bit here, a little bit there. They can all play their little part in this band.
And that's why I hesitate to say value's dead, because you can't like there's still a tremendous amount of value in finance. There's still a tremendous amount of value in industrials. What I'm seeing is as those sectors are separating, it's because they don't have a unified theme to drive those areas of the market. Yep. Growth does right now. I don't think there's any one strong theme right now, but you have those areas of the market participating very similar, whereas you're starting to see separation in the cyclicals. I see that separation continuing. So I don't think it's going to be in those, let me be clear, in those cyclical areas of the marketplace, I see continued separation. That's what I see. So it's going to be a very stock pickers driven area of the market. Whereas when you have an area of the market that is unified based on a theme, throw a dart at the Wall Street Journal and it works. It just gets a heck of a lot easier. So when certain areas are driving together, that's where we want to navigate to, because our money doesn't move the market. We got to follow the money. And right now, the growth areas of the market look like they're cooking.
Yeah, I agree. All right. Anything else on broad markets here, guys, before we move to commodities? Anybody got anything they want? Let's do it. Let's go.
I did have like a 15-minute sector rotation model prepared on utilities, but I'm going to just say it's July 4th weekend.
Hold on. Well, I could go brew me some more coffee.
No,
Now, the utility rotation on July 4th weekend, I'm not interested in a long diatribe on that. No, but I don't think anybody is, including yourself. Commodities next here. Let's go to crude light, then gold, and then take a peek at Bitcoin and the dollar. Crude light first here, Mark. Obviously, OPEC plus meetings over the last 48 hours have been catching headlines for the crude light, space and energy in general. Saw the UAE is actually pushing back on some of the proposed production, levels that the output levels that they're trying to agree on there at OPEC plus. Crude just keeps chugging along, bumping into these overhead resistances from old past, in terms of the chart, but still a very bullish trend in the short term. Mark, what's your read on crude light and the energy space here in commodities?
I'm trying to find the right words to describe the perfect trifecta of fundamentals, technicals, and sentiment, because oil has it all. It's had it all for a while now, to be honest. OPEC plus meeting once again is a gigantic Fed meeting, and you just want chalk as a oil bull. You want chalk, you got chalk. That's all you need. The sentiment, more and more. Bank of America came out last week, $100 price target in oil. More and more people, it's the copycat game, right? One bank has the courage to make an outlandish, and then, we can't let Bank of America be the only one, right? And so you're seeing this sentiment and oil price targets getting jacked up across the board everywhere. And so you really have this trifecta of technicals, in a nice bullish trend, short-term momentum, obviously, sentiment and fundamentals. I mean, the world, one of the things that we always need to be reminded of oil, I mean, this is a commodity that's based on world demand. It's not a U.S.-centric product. And you still have so much reopening to go in the world itself. And with producers, not just OPEC, but shell producers as well, showing some restraint, not flooding the market. You just have a 1, 2, 3 perfect lineup. It's been there for a while. It's one of the reasons we've been so bullish on oil, and by default energy stocks as well. And it just, it's the only thing to poo-poo right now is that you've a little bit stretched over the last 3-4 weeks, and you're heading into a resistance level, right?
Yeah.
Wouldn't be surprising if we see some consolidation at this point. But from a broader, longer term perspective, man, you don't get those things very often where all three line up. You have it right now for the oil, but it's just a little overextended in the short term, in my opinion. And that resistance level is not my opinion. That resistance level is just there, and has to fight through it.
Mm-hmm. Mm-hmm. Frankie, what about you in the chart here? Obviously we've got this nice, lineup here that Matt has drawn that represents that resistance level from old previous historical ranges that are definitely, there. And we've been fighting up against it. We've talked about it several times on the show here with Matt. What's your read on the chart? Technically, is nice. It's moving upward. It's bullish.
Yeah, well, this is where it gets a little tough, because let's call it what it is. The easy trade was 70 to 75, because pretty much everybody was comfortable saying 75 resistance, right? Mm-hmm. And that wasn't just tackle trading. I mean, that was everything that I saw on that. And now we're into this resistance zone. And, I've been calling it 75. Clearly, it's been a little bit higher than that because it is a zone. And as Mark said, we're a little bit overextended. So for a new trade, I think we need some sort of consolidation here so we can actually get a legitimate break for that next leg to the upside. So if I'm looking at a new trade in this space, I don't really know exactly where I should call it a breakout. Should I call it right now? Should I call it at 77? Should I have already called it at 75? right? It is a big zone. I think if we cook a little bit and develop a resistance in the short term, then we'll be able to use that resistance as our breakout point. I do think that this is a very interesting breakout candidate, but I think if we're thinking about a new trade in particular, letting it cook a little bit would probably be best for that next breakout trade.
Matt, and what about you? I love this long-term chart. It shows a lot of that, why that historical level is significant. What about you on the chart here? How are you reading it?
There's a tremendous amount of chop left of the chart everywhere between 77 and, quite frankly, all the way up to legitimately 92. When you're talking about the potential breakout here, and whether or not you're overextended or not, I think technicians would agree to disagree on that one right now with regard to crude. But this zone, nobody disagrees with.
Mm-hmm.
And Frank's 100% right. Everybody and their dog at 70 was calling this bull flag and saying it's the easiest trade to 75. Everybody was.
It was everywhere. Yeah, it really was.
It was a really simple trade. 75. And Frankie, I know the zones between above 75, but I call it 75 as well. The 75 zone for me goes from 75 to 77 is where that zone goes from. And so for me, because of the mixed technical flavor here, I think giving this a little bit of time, letting it navigate the choppiness of 75 to 77, because even though you do have quite a bit left of the chart when you go back to those longer term time frames, it gets a lot simpler above 77 in my opinion. Mm-hmm. And also that's on the backs of some disagreement we've seen in the last 24 hours regarding the cuts or the projected cuts that OPEC Plus is looking to make. They were expected to, and I don't know what the current right now very second news is, so correct me if I'm wrong, but from what I was reading earlier today, UAE did not agree with the projected cuts of 400,000 at OPEC Plus, and they were looking to renegotiate that. And so there is going to be a little bit of volatility, due to the unforeseen news cycle on these very important decisions that OPEC Plus is making regarding the cuts, the anticipated cuts of 400,000.
Yeah, it feels like a Robert's Rules of Order moment where the UAE is pushing back and they want clarification of the way that their cuts are being defined.
I'm an oil geek. I've seen. I guess the reason I didn't even bring it up is I've seen this 24 times. They always make exceptions. Like if one of the smaller members or even the medium members want to push something, they find a way to make exceptions to placate them.
Like a natural negotiation, right?
Yeah,
I mean, they're
like
bringing up a concern, and then over time, I think it will settle itself out, but we don't know that at this exact print in this moment. It's been 2 days. They've been trying to figure out a final deal, and they've not announced one. So
yeah, but that 400,000 number is pretty much accepted by the marketplace.
Well, and demand globally, I think, is the
demand
story.
is outpacing that
whatever supply is.
And so the point is that until the decision is made, you could deal with some volatility as you navigate the resistance channel. That was my point.
Oh, resistance does not need much of an excuse to sell off, right? Like when you're at resistance levels, like is the wind blowing east? Is the wind blowing west? It can take a little sell off at resistance for any reason.
Mm-hmm. Yep. Mm-hmm. All right, let's take a look at gold next here, then the Bitcoin and the dollar as well as we round out the market skyline. This one's still in that box, Matt. It's obviously fired back for 3 days in a row here, coming off of support at 1750, moving back up towards 1800. I've got a 90 EMA rolling in as it's trying to consolidate here. What is your read technically on gold here in the short term?
The only thing that happened this week is I have to redraw my box. That's it.
There it is.
Dude.
Now I got wicks. That's all. There's no take here.
I have a philosophical question. It's like the forest and the trees. If a tree falls in the forest.
If you're trying to get me to go on a prolonged diatribe on gold.
If you have to redraw a box, is it a box?
Yes, 100% it's a box. It looks like a box. It is a box.
Yeah. Yeah, it's a box. It might be a variant box. I've been watching Loki.
That's not a theoretical question. You're the only person that's ever asked it.
Yeah. It's not a circle.
That's the box.
No. All right. Yeah. Frank, what about you though? I mean, I'm with Matt 100% until it does something outside that box. I'm going to kind of keep the snooze button on for a
See,
bit.
I think you're both wrong. It's a rectangle. And it's
See,
about the only
box.
so the only thing that I would really add here is it's nice to see a little stabilization, right? I think we still have a ways to go, but it's a good start, right? I agree with Matt. It still needs a little bit more time before we get anything going anywhere. But right now, the longer we're in the box, the more we can trust the box, right, Matt? And
100%.
when we get a break out of that box, we'll probably like a little bit more. So I think we're at least looking at another, week or two before. I mean, it could break the box on next week, obviously, but I think for a good trade setup, we get a little bit of a pullback. We test a higher level of support. We take another run, consolidate. We're looking at 2 weeks from now. Maybe we're breaking the top of that box, and that could be interesting. We'll just have to see how it actually looks if that develops.
yeah, listen, Bitcoin's
and
like,
let me add
here, I'll show you a box.
Let me add one thing to the analysis, Frankie, very quickly on that. You said the longer it stays in the box, the more we like it, right? It's because as the data starts adding up, you start to see things a little bit more clearly. And so, for example, it's just one data point, but when you look at this data point today, gold's firing off, guys, doing really, really good, reclaiming the 9 EMA, doing really good. But where does it get stopped on? That exact same data point over here. And so when you're looking at this from an intraday perspective, and you say, okay, yeah, you got to like the firing off response, right? You got to like the firing off response. Well, did anything really change? No, it came right into a known resistance point, which now is solidified, which now you can start looking at when it breaks out of that level. You know what I mean? And so it adds context to the why gold came down today, because it was doing really, really healthy on the overnight action. It was doing really good earlier today. But again, resistance is resistance until it is violated. And so as that goes through that time frame in the box, yeah, you understand why it didn't continue today, because that news is not positive news that would break it out of the box.
I agree. Love it. I love the intraday chart there. It does show you that, yeah, you got to be excited about the anticipation, but till you get that break, it's just not there yet. And those data points adding up start to solidify that rectangle. I guess we're going to have to clarify that, Frank.
I don't know how much excited you're going to get. I'm just saying the longer you stay in the box, you start to see the technicals clearly. Yeah, the excitement above 1800, you're going to get stopped on a dime on a falling 20. So
yeah, I mean that's it. And I'm actually writing on this exact subject in the commodities report this weekend about short-term consolidation patterns that form really quickly after a sudden drop. Because oftentimes consolidation patterns will form after like 2 or 3 weeks down, right? They get sell-offs and then something bottoms, a reversal. But like both Bitcoin and gold had really fast drops and then formed consolidation. And I find it interesting. I find it an interesting thing. And I'm going to be discussing it in the commodities report this weekend.
Bitcoin's consolidation obviously is in a much larger box over a longer period of time now. It's actually been churning and developing now for about a month. I did read Bitcoin had the worst month in June in like 4.5 years, something like that, Matt. The sell-off has been precipitous here. And now we're still at 33,000 and kind of stuck in the box. What's your read here technically on Bitcoin?
I don't have it. It's in the box.
Inside the box. Frankie, anything you want to add?
Let everybody else overreact to
I mean,
price movements in Bitcoin.
I think Matt is correct in the sense that you let this play out. The thing about Bitcoin, and maybe this is just kind of the outsider, because I've been relatively slow to get in on the Bitcoin train, is to me it seems like you want to roll with Bitcoin when it's a momentum trade, and when it's not a momentum trade, let smarter people than me figure out what to do with it. Because when it's cooking, I mean, it's cooking, right? I don't think anyone would argue against that. It clearly isn't cooking right now, right? So, and to get out of that, I mean, that box getting out of is the first step, right? Before we can do that. So I don't really think there's a lot to see here. I do think it is, just from a pure technical point of view, What we're always kind of looking to see is that building of support followed by that breaking of resistance. And we've not been able to do anything of that nature. It looked like maybe there was a slim chance it was going to try a couple of weeks ago. That gave out, slid right back to the bottom, reset that thing altogether. So I think you are still maintaining this, leaving it in the box, leaving it alone, unless you're trying to, intraday play within that range, which I'm sure has been profitable for a lot of folks.
Have you guys ever, let me put it like this. I've been very impressed by how many Bitcoin bulls have declared victory at certain moments in time while it's been in the box. Yeah. And I've been impressed with how many Bitcoin bears have declared victory at certain points in the box. That's how volatile this box is, right? Because when you're talking about it going from 30K to 40K, I mean, that's a 25% price movement. That's a nice drop in price. It's just a wide range volatility is what I have Bitcoin as. And as long as Bitcoin stays between, quite frankly, 29 and 40 for me, there's nothing to see here. For me, for others,
sure,
it's a different beast, right? Sure. Everybody's going to have their different take on it. But for me, as long as it stays in the box, it's going to be in the box. It's going to get box analysis for me.
Every time you say that, Matt, it reminds me of something that happened some 25 years ago where we were playing video games. And I learned that day never to declare victory prematurely because we still make fun of Tim for trying to do that same thing. And that was like 25 years ago.
Daggered a Madden football game and then lost on a pick six. It wasn't a good moment and will be known throughout history as the dagger game.
Today, Frank, I learned that you do not start a drinking game with the term box in the tackle trading halftime once we start commodities.
That is a very good lesson to learn as well.
That is not a drinking phrase. Don't do it. Don't do it.
We're not moving past the Madden game. Yeah, I got beat.
Listen, I tried to give you some cover there, Tim.
No, that's fine. That's fine. I'm never going to live that one down.
I do want to add one quick point here. When you're looking at, because we talked about gold being in a box, and the box just signifies neutrality, guys, right? It's just our creative way at tackle, or specifically in the halftime report. When you're looking at Bitcoin, when you're looking at gold, I made a comment on gold that if the breakout here of 1795 by 1800 and whether or not that is tradable, any breakout is tradable, but I'm looking at gold. And even if it does break out here, I don't like it. I just don't. I don't like it because of these falling moving averages. I don't like it because I could see so many downward movements in price here. I like it a little bit more on a potential retracement here. There is a key difference, though, in the Bitcoin analysis versus the gold analysis, and it goes to the amount of time Bitcoin has consolidated between 30 and 40,000. On any $40,000 breakout at this point, you don't have moving averages coming down to stop your price appreciation. That's because Bitcoin has consolidated about a month longer than gold has done, allowing that very important 50-day moving average to come down and get in a fairly similar zone as the breakout channel. And with the average price of Bitcoin being down around 35, 33,000 over the course of the last couple of weeks, look for that 50-day moving average to come down. Not going to happen next week, but again, as you see the prolonged nature of neutrality, that lines up those breakouts a little bit more legitimately, in my opinion, than short terms because of the moving averages. Just wanted to make the point.
Yeah, I like the point as well. And that's that consolidation. I mean, where gold is now, that's kind of where Bitcoin was mid-May probably, and it was down there and still.
And again, I don't anticipate that happening next week. That's more like 3-4 weeks down the road, potentially. But I do like putting it on radars.
I got to tell you, the sentiment around Bitcoin right now is very, very split and continues to be. Those bulls and bears, they still have their very, very strong opinions about the short term. The dollar next, though, let's take a peek at that. Then we're going to get into individual companies. Not many news stories like today. We'll probably move right into Frank's charts. The dollar did fire back over the course of the last week, Matt, higher pivot low. It's got to be moving into the bullish territory in terms of short-term analysis. How do you read the chart here for the dollar?
I I don't have any deep dive analysis on the dollar today.
Yeah.
Yeah. I haven't done my currency rankings for the scouting report yet, so I don't really have a take yet. I have this just a little bit overextended into a potential breakout from a technical perspective on the backs of a positive economic situation. But outside of that, I got to go look at the other currencies.
Not much else there. All right, guys.
And honestly, I don't think it would do us justice in the halftime report because I don't think there's a takeaway.
There's not much takeaway here. Yeah, it's held. Yeah. All right, guys, not much in the news here today. One news story that did hit intraday stock talk, I just want to give it, is Avgo, Broadcom. The FTC, I read a couple stories from the FTC today. Actually, there's some rumors about a Facebook suit as well. The FTC did accuse Broadcom of illegal monopolization of the semiconductor market. It had initial price response to the downside. It's now just kind of holding a consolidation here. These stories always take long periods of time to actually work themselves out. I don't really see much here in that analysis. I actually still like a potential breakout if it ever does develop there above these consolidations. Matt, whenever the government gets involved on a chip company or a tech company or any of this, whether it's an AG or the FTC or whatever it is, I always take it with a grain of salt until I actually see things get finished. What about you?
Everything the SEC does with a grain of salt.
Yeah.
They slap people on the wrist. They're the NCAA who finds people for they're the NBA who finds players for like $500.
Yeah.
They make $48 million a year. That's what the SEC does. So
sure. And then Marky, space, Virgin Galactic. I guess these billionaires are all racing to get actually into orbit here.
There's rich people problems, and then there's rich people problems.
Yeah. Bezos and now Richard Branson will be going to space during the month of July. July 11th is Branson's target date. I don't know exactly when Bezos is. I think actually Branson tried to get in front of him on that 9 days before Bezos is going to take flight. Don't care much about the story. I think it's an interesting, from a stock perspective, interesting human interest story when these billionaires start to compete and fight. Space race between Richard Branson and Jeff Bezos. Frank, that's what you got to look forward to in the month of July. All right,
This is my kind of news cycle. Nothing. That's the news. That is what I always want as a trader.
Lets you get into charts faster. That's right. So let's go into Frank's charts here on a Friday to end out the week. Kind of a little bit of a sneak peek into our scouting report meeting a little bit. Frankie, what you got dialed up for us today?
Ooh, all right. Let's start. I just want to start with just an easy, clean breakout. See what you guys think about SYNH. And I did a preliminary, but not an official earnings check. I would advise everybody as we get approaching this earnings season. SYNH. Make sure you're double checking those earnings. I know I say it a lot, but there's a reason. I've been caught on a miss of an earnings report once or twice. It isn't any fun. But I think we have plenty of time for earnings here on SNYH. What really kind of drew me to these guys here, Maddie, is really a couple of things. We had a breakout, right? We broke out of, back in April and have really just that was a huge pop on that breakout, but have really gone very, very sideways ever since. Now we've had a little bit of time to work back into that resistance. Now I'm wondering, kind of rut style, is resistance going to win or are we going to break out, right? Well, I don't know the answer to that, but I do know if I break out, at least, that is potentially a tradable opportunity. We've taken a little bit of time over this past week to consolidate a little bit, not the cleanest, but certainly not a messy consolidation. Yeah. Looking at a low to develop to maybe push us through that little triple top. I always, I always like a breakout. I always like a clean breakout, easy entry, easy options for stop losses. Easy target. I mean, if 100 doesn't jump out to you, I don't know what does on something like this.
And I was going to say that, Frank, when you look at the last consolidation here, hesitation, 4-day hesitation coming into the breakout. Breakout was strong, and the breakout went from $80 to $90. Nice little clean breakout channel there. You have the consolidation here. You're looking at a $90 breakout. And what do we like to say about $90 breakouts?
We say 90% of the time it goes to
That's not what I say. With a grain of salt, they always go to $100. I like the potential here, just from a pure technical perspective. You got good consolidation. You're looking at, and let me get outside those boxes. Just give me 1 second. So you got good what in the, it's just wanting to do what it wants to do. So coming here, you got, and Frank, you said it's not the cleanest, but I would say it's pretty clean.
Oh, it's pretty clean.
You
It's
know,
pretty clean,
like,
right?
look at the resistance over here at 90, tagged over here at 90, and then you get that consolidation at 90, where it's kind of riding that 90 MA, just hesitating before that breakout. That hesitation before the breakout, you and I are always going to appreciate a hesitation before a breakout. And you do got that. You got a clean breakout above $90. You got history that says the 10-point movement is definitely reasonable here. $100 is that significant whole number. And yeah, Frank, nothing is 100% of the time, but we do like breakouts, and we definitely like clean breakouts, and we do like clean breakouts above $90, and we do like them typically going to 100.
Yeah, we do. And, to add a little icing on the cake with these guys, and obviously it would probably depend on you, but you're roughly speaking, if we're coming in above that resistance with our stop loss somewhere slightly below the 90 MA, you're looking at approximately 3-to-1 risk to reward ratio. So risk to reward is, you might want a little more, room on your stop. You might get, a little more confirmation, but I think risk to reward is going to be pretty nice if we can get that break as well, which is always nice to see, right? You always want 2-to-1, but you want more, right? We want more. We want 3-to-1.
I like the cleanliness of the potential breakout, and I do like the hesitation coming into it.
Tim, anything you or Mark would like to add there?
Triple top break.
Weekly chart is what you're going to like.
Triple top breakouts on a very clear entry point, specifically at $90 with that psychological level. Yeah, I like it. I like it a lot. Yeah.
All right. I got. Sounds like we've got. Seems like we've got a moving forward. All right.
Too.
So, yeah, like moving and shaking. All right, let's talk about a pullback, and you're seeing this across the board, in the solar space. Seeing some nice movement, seeing some pullbacks this week. They all look fairly similar to one another, at least in my opinion, but I'd like to look at Canadian Solar, CSIQ.
It's on a lot of people's radars this week. Yeah.
It should be.
Yeah,
it should be. I mean, the space has really heated up, right? So this is, to a certain extent, an industry related move. Obviously, tech has been strong. That's been helpful too. Big pop when we finally broke out of that 50-day moving average, finally broke that resistance. We didn't have much of a chance to get in. We had to be pretty darn quick to get in. We've pulled back fairly orderly into those moving averages as it currently stands. And I think that is important on this, because if it pulls back much deeper, I'm probably going to like things like SunPower better or some other stocks in that area. But going specifically into early next week, if we can hold this low and start some upward momentum, taking out today's high, that would get us right back above the 200-day moving average. That would, of course, have sprung us off the 9 EMA, should be a favorable risk to reward ratio. So this would be kind of picking up your shot, I guess, in the space. I think the risk to reward as it stands right now is a little more favorable on Canadian Solar than some of its counterparts. Tim, let me go with you, Mark. Actually, you didn't get to talk last time. Are you interested in this pullback in the space as a whole? And if so, is there anything about Canadian that you like or dislike, that stands out to you?
Well, I like the space right now from a cash flow perspective. Whenever you form, bottoming patterns and breakout, I usually sell naked puts back into the range. That's what I do. I mean, that approach has treated me well. And so I like it from so I'm only analyzing it from a cash flow perspective. Sure. And I do like it from a cash flow perspective. I leave the directional signals and how much you like them to you guys. But I do like this general space, but it's like anything on the way up. Like when you go, to weekly charts and apply moving averages, I mean, this is one of the problems directionally sometimes when you are fighting on the way up. You're having to fight through all kinds of stuff.
That's the nature of the reversal, right?
Chart. It's the nature of the reversal, and it will always be true. That's just the math of it. And so you're always fighting through things. And when you eventually fight through those things, if you're patient and you believe in the move, you can get greatly rewarded. But, it's rarely a V shape. It's rarely a straight line. There's moves, pullbacks, secondary moves, And so this type of pattern is very, very normal on a reversal type pattern.
Right. Yeah, it is important, whenever you're trading these reversals, you win one fight and you're rewarded with another, right? And it's fairly ongoing. So Matt, Tim, either of you like to add anything to that?
Listen, I can't believe Mark didn't go for the joke here. Do you like it boiled? Do you like it fried? Do you like it in a gumbo? Do you like it in a stew? This was the stock we talked about on Wednesday in Jedi Options. And at the time, I was leaning more on the bull put side. I like it in 18 different ways, Frank, for different reasons. I think there's a lot of ways you can play it. The volatility is high enough. You can get credits. But at that time, really, the comment was with Tyler was, I want to see a little bit more development in the candles before I look at a delta side of it.
Mm-hmm.
I'm seeing what I want to see develop here on this candle or this bar today. If it stays light range, that sets up for better triggers potentially on the upside. I love the move that started earlier in this week. This backing and filling is very natural after a move like that. If I get a trigger above it, I absolutely could see a directional play here. But again, I think there's a couple of different ways you can approach a CSIQ, which is a fundamentally sound solar company as well on our Tackle 25 list. So listen, it's two in a row. I don't have anything to say no to on these two. I don't think CSIQ is a trigger today. Obviously, it still needs to have that confirmation candlestick, but I like it the whole way. Yes.
Well, you also like the development on the retracement. When we were discussing this on Wednesday here, all of us we leaned to the bull put because of the overextended nature, and we wanted to see the bullish retracement kind of shape up and go through the process. And you're seeing that. You're seeing the slowing momentum as you come into support. Look at the body of the candle, look at the body of the candle, but you can also see it from the daily wick as well. Look at the wick here. Look at the increasing bearish momentum all the way down. So you go from wick at 44.55 to wick at, we'll just go 43, 55 cents down. Then you go from 43 to a wick right there on the 90 EMA at 42.77. So whether you're using the wick or whether you're using the candle's body, you definitely see slowing momentum as you start getting into support. So you're really just waiting on that ultimate confirmation from a CSIQ perspective. You talked about this might be a sector type thing, and I certainly see that as well, Frank. You're looking at a sector here. This is TAN, the ETF that tracks kind of the solar movement, and you're looking at a bullish retracement coming into the 200-day 90 EMA. You're looking at a very similar candle type perspective over the last few days. You're looking at the same type of momentum here on the daily chart on TAN as you're seeing on Canadian Solar. And so when you're in that zone as an industry, you're going to see a lot that looks similar to that.
Absolutely.
And so whether you're talking about Canadian Solar or whether you're talking about, one of our old time favorites in First Solar, you gotta like the space, right? And whether you like the strength with the support level on at $90 on First Solar with the flag-based pattern, or whether you like that more traditional bullish retracement on Canadian Solar, I think that's a little bit of the eye of the beholder.
I would agree.
Right. But I do like the zone that this industry is in right now from a technical perspective.
Yeah, I think that's spot on. And it gives us options, right? We can compare them versus one another, how much we're getting for selling that put, what does the risk to reward look like? What's the easiest one to get in, do we think? So I always like when you've got the backdrop of the industry move behind you, because you do get legitimate options. And this could change. This pulls back too much deeper. I probably like somebody a little bit better on Wednesday, right? So definitely a space I think worth keeping an eye out for. Maybe two more.
I would be a little surprised if we didn't have at least one solar company on the option.
I would be as well. I think we'll at least have one going out there. I know Tim's going to cut me off, so I got to try to get in a couple of more while the getting is good.
Rapid fire style, Frankie.
And what about Tim's good friend, Bill? We all like Bill, right? Everybody knows a Bill in their life. BILL Holdings. This was something that was in the report a few weeks back on the initial breakout, has ran into resistance, has pulled back. Now, I'm going to ask you, Matt, I think we would all agree that this is a potential breakout candidate. I don't think anyone could argue that it's not. Would anybody fight me on that?
No.
I mean, that it just is what it is, right? And so the breakout certainly on my radar But with this gradual pullback that we've seen off of resistance, which makes perfect sense to me, that's what it should have done, at least in my opinion. Could you maybe at least entertain the notion, Maddie, of scaling into this, kind of front running the breakout with half of the position into resistance and then adding on the break? Would you say, yuck, what are you doing? Let's find something else. Would you say, I like it, but I think we need the clean break? Where's your head on something like this?
What 193 is the breakout channel, is where you're looking at that. 185 is the confirmation on the bullish retracement.
Agreed.
Which means you, and not only that, Frankie, but when you look at this trend line here, you got a nice little trend line punching down that you broke out of that trend line today. You're looking at 185 right here as that potential confirmation trigger, right?
Yep.
And so what you're talking about is the distance between 185 and really kind of that 192, 193 zone right there. And I think you got significant potential return there to justify, and the analysis to justify a little bit of scaling in, front running as you approach that breakout. Now, whether or not you love Bill or not, I do think the analysis is legitimate on a scaling in with a potential add on the breakout.
And that's where my head was personally, is because you have a decent risk to reward. If resistance wins, right, in that mind, depending on how you do things, you should at least be able to get a 1-to-1. At least I would at least be able to get 1-to-1. Definitely, just somebody that's been treating people right as of late. Gotta like that movement. Certainly something I think worth keeping an eye out for. And lastly, Tim, because I know you're going to do it, I got to take a look at BCE again.
BCE?
BCE, Bravo Charlie Echo.
And now I'm worried of giving Frank some anxiety complex about cutting him off.
Well, listen, you have everyone I get. I'm like, listen, I just keep adding one more. Okay, I'm going to give one. I'm just going to keep telling it so you feel bad about it, right? I know how to play the
Frank, right. I am so glad somebody else gets cut off by Tim.
Listen, it's just the American way, right? At this point in time. So, but BCE here, I mean, this was a major breakout, right? If we go back, I mean, and you can go back as long as you want to, this was that huge, almost a decade-long breakout that we had here a few weeks ago. We had Cody specialed it on the weekly chart back into that breakout channel. Saw a little bit of upward movement this week. Makes a little sense, at least to me, that it wasn't a just fire right back off of that snapback, because we had to contend with these falling moving averages, right? And so we were seeing a little bit on the multiple time frame. Daily placement looked great, or on the weekly, I'm sorry. On the daily, we had to navigate through the downward trend that got us here in the first place, the falling 9, the 20 lumen on top of us. But with the movement we've seen this week, we've got a little more information. I would argue at least that support level is to be trusted. We've got an entry, whereas last week it was probably purely off of the weekly high or something to that general effect. Now we can kind of look at it and say, okay, well, if we can take out that high from last week at this point in time, that's also going to give us the 200, the 20-day break as well, which would be confirmation on that weekly chart. This snapback, and I was telling somebody, earlier in this week, I don't know how this plays out, but I do know you don't get a lot of chances in life to trade breakouts that took 8 years to 9 years to develop. And when they develop and pull back to the breakout point, you don't get to see that very often. I want to be able to see what it looks like. We'll see if that's a good idea or not. But any thoughts on the development that we've seen this week?
And yeah, I'll just quickly do this because I know we're in rapid fire time frame here, but in that same 9-year time frame, this didn't break out. The S&P broke out 968 times.
Yep.
So there's that. I do like the zone on the weekly chart. You're looking at that zone on the weekly chart and you're saying, okay, I like this zone at 49, right? Old backdrop here, old resistance zone, new support zone, good momentum on that weekly chart. And so I couldn't veto because of the strength of the weekly chart, but I think that daily chart needs time. And even on a breakout, what are you talking? 59? I mean, $50.90. I think there's going to be better scenarios for the active swing trader than BCE.
So, I could understand where you're at there. If you're looking at just trying to get back to those highs, I would 100% agree with that. That is not where I'd be trying.
I think the swing trader has to, though. I mean, that's 5 days of consolidation there.
So yeah, there's a little, I mean, that might be a reasonable place for target one, but again, I would argue that if that's where your concern is, and fair enough, right? Your concerns are your own. What are you doing? Right. Find something that doesn't have concern that far away.
And that's where my head is at with what's happening in the growth areas of the market. I think there's going to be a ton of potential trades next week.
Well, there's going to be a ton. Yeah, absolutely. And you can't have them all. You can get lots of them, but you can't trade them all.
I'm an official veto on BCE on any swing trade, but on the,
and I think BCE, I do think it makes more sense for the, a lot of times I kind of consider myself somewhere between a swing and a position trade. I think it would fit into that window. I could understand the very short-term trader passing, finding something else. I do think it is very much worth keeping on your watch list personally, just from a purely technical point of view. All right, Tim. All right, I'll let you.
Yeah, just one quick thing to add on this. This is the type of signal that if this was a company I loved, and I was like, oh my gosh, I'm waiting, I need to add, I like the pattern a lot. I understand Matt's concerns from a swing trading, but it's like one of those, so much of how you look at this chart is how much do you love the company and what type of trader
were you waiting on something? Yeah.
That
makes sense. Frankie, I did not officially cut you off here.
I know you didn't, and I appreciate you giving me the luxury of time, sir. Always appreciate it. Thank you very much.
There's some great ones there, though. I got to tell you, I love the analysis on SYNH. Really, really clean $90 breakout. CSIQ, like we've talked about. I think solar's developing. Bill looked clean. Obviously there was some hesitation on BCE, but that's the nature of having the back and forth, and that's what we do in our scouting report meetings each and every Friday as we get ready for the weekend reports, getting you guys prepared for the trading week ahead of you. We're going to be moving into that as coaches here shortly, but let's start wrapping up our show here on a Friday, and let's just get final thoughts for the week. Holiday weekend, guys. On Monday, our regular programming is going to be suspended on that with the national holiday. We won't have the halftime report. We'll be doing a podcast and releasing it like we do each and every Monday, but we'll be back Tuesday with regular programming here at Tackle Trading. Coach Frank, final thoughts for the team out there.
Yeah, enjoy your 3-day weekend. Be on the lookout for earnings. Start considering that. Go with the trends. Not a whole lot different, right? Just business as usual. But enjoy. Have a safe and happy 3-day weekend.
Yep. Matt, final thoughts for you, sir.
Same. Have an absolutely amazing, beautiful holiday weekend, Team Tackle. I think we all deserve an amazing, beautiful July 4th this year. So enjoy it. Be safe. Love you guys. Have a great week.
And Mark, you do have your weekly wrap up at the closing bell here in an hour.
Commodities, and Mind of a Trader at the closing bell. And we won't be having the Sunday night prep class this week for the holiday reasons. Just programming. Listen, take advantage of these times. I will do a video updating just what I normally cover on the Sunday night prep class. I'll post that sometime Sunday night. 1 hour, 12 minutes. Going to do commodities and Mind of a Trader at the closing bell.
Fantastic. Be safe. Have a great weekend. We will see you guys back Tuesday on the halftime show. Until then.